Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video for Thursday, April 21st, about 25 minutes after market close here in Jacksonville, Florida. And today we had quite a nasty reversal in the markets. As you can see there under what just happened, a Tesla-induced gap up following their earnings release yesterday afternoon turns to a broad market bloodbath. And we're going to elaborate a little bit more once we get into the charts on what I mean by broad market. Essentially nowhere to hide today. Very, very, very little that was actually green out there in the markets today. So let's get right into it and let's talk about performance. As you can see, the G6, the worst of the day, along with the Qs. G6 down a little over 3%, the S&P down about 1.5%, Qs down over 2%, Dow down a little over 1%. The more defensive of the indices holding up a little better today. Mid caps down just slightly under 2%. Russell 2000 down a little over 2%. 60/40 down about 1.1, and Grotection was down 1.33 today. So let's get into the state, the trend gauge, and then we're going to get into the tail of the tape. So market state, still consolidation. This will probably change to downtrend or something of those sorts if the recent lows are broken on the SPY or on the S&P 500. So we're going to look at what those key levels are. We've talked about them in exhaustion over the last couple of weeks, but for right now it stays in consolidation. But just keep in mind that's likely to change if we get follow through to the downside to close the week out. Trend gauge wise, we have all of these here leaning bearish. As you can see, the small red sub arrows here on medium term, short term, and market leaders all trending towards bearish. The main arrows have not been changed yet, but again, that is subject to change if we see more weakness tomorrow to close out the week. So we do have mid caps clinging on to stay above the 21 and the 50. The Dow is still trying to stay above the 21 and the 50, but for the most part, the S&Ps, the Qs, and the small caps not looking so great. So right now, a small red sub arrow. If there is follow through tomorrow, I would expect these are most likely going to change. So not any changes to the long term. That stays as is. As of the change on 4/14, we moved from neutral to down as we got rejected and came back below that 200-day moving average. So let's talk about Revere for just one quick second before we get to the tail of the tape. And main thing I want to show you here is my email, hunter@revereasset.com. If you have any questions on anything I cover in this video, please don't hesitate to send me an email, or you can email anybody here, Dan, Tim, Don at revereasset.com with any questions you may have. So let's get into the tail of the tape. And I have the S&P 500 over here on the right side of the screen. You can see this really nasty candle today. What looked promising at the open ended up looking really bad by the end of the day. So let's get into it here. Headwinds remain the same. We've mentioned this in every video, but interest rates coming into play again today as they continue to move higher. Sentiment wise, we saw a spike back up on the put call ratio back above that one level, basically closing at 1.1. For the better part of the last few weeks, we've been kind of closing in the 0.9 to 1 range. So given the action today, to be expected, but put call ratio back up to 1.1. VIX up about 13% to around the 23 area, and the fear greed still kind of hovering around neutral to mild fear, down just a little bit to a 46 here. As we've talked about here on the bull case and the bear case, on 4/14, that failed the bull case and confirmed the bear case. We failed to reclaim those key moving averages, and you can argue that today is more confirmation of that. Unable to stay above and reclaim these key moving averages, as you can see on the S&P here. Slightly poked our head above the 200 and failed, came all the way back through the 21, the 8, and the 50 here on the S&P. News-wise, as I mentioned, a Tesla-fueled gap up today in the markets, but not only in the markets, just Tesla was up about 10 to 11% pre-market as we came into the open today, fades to only plus 3% by the close. So basically almost $100 range on Tesla today, from a highs of around 1090-ish to all the way back down under 1,000 at one point, closed slightly over the 1,000 level. What were we watching today? What would the S&P do versus possible resistance at the 200-day, as you can see right here, and also support at that 50% fib, 43.85, 4,400. So obviously we got above the 200-day by just a tiny bit and failed. That's what the ANF stands for there. So above and failed. at that resistance level at the 200-day, but still kind of hanging on to the 4385, 4400 resistance or support, excuse me. So let me pull up the actual S&P 500 because I've actually got the SPY, so you can see it more with the numbers here. There we go. Okay, now we'll pull the tail of the tape back up here. Sorry. Okay, so as you can see, poked our head above the 200-day, which also corresponds to this 4,500 level, and back down below, but we did hold on to that 4385-ish area. That's about the only positive you can pull out of the market today. Aside from that, there is not very much. QQQ, on the other hand, got above and failed at resistance, that 50-day / the 347 level, which also corresponded to yesterday's high, was briefly above that, came back down sharply, and then also support that 338 fib that we had been talking about here, just sliced through like butter today. So really no positives to say here on QQQ, as it was acting worse than the other major indices today. Action-wise, pretty simple here. Open up about 1% here on the S&P, and at about 10 o'clock, we had a nasty reversal that led to a frozen slope trend down. You've heard of the frozen rope to the upside. Frozen slope is the same thing to the downside, meaning there's really no reprieve in the selling, just a more or less a 90-degree angle straight down. And that's really what we got on an intraday basis here. So notes-wise, the gap on Tesla held and looked really strong for the better part of the first 30 to 40 minutes this morning. And then we got the same thing that you saw at the S&P, or that we mentioned with the S&P here. And we're going to look at that on an intraday basis. Frozen slope trending down for the rest of the day. Performance-wise, we went over this, but this just details how nasty it was out there today. S&P was up almost 1% at the open, closed down 1.5%. G6 extremely weak, down over 3. 60/40 down about 1.1. Grow down about 1.33. Sector-wise, Jet's really the only green one worth mentioning here, and that is your airline ETF getting a boost from United Airlines and Delta, which have been strong recently. XLP and XLRE, that's your staples and your real estate. These were green all the way up until the last little bit of the day, but we've kept them here in yellow because they were showing nice relative strength versus the market. XLP just moderately down, XLRE down a little over 0.5%, but compared to the broader markets, really not much, not bad at all. On the bad side of things, plenty to choose from in sector land: oils, bonds, gold, silver, and miners, aerospace and defense, biotech, solar, which has been absolutely demolished in the last 2 days. We're going to look at those charts in just a moment. Uranium and fertilizers, all absolutely getting waylaid today. Portfolio-wise, we did a good bit of selling to de-risk with this poor action today. So we went from a beta of 0.69 to a beta of 0.26. We sold GFI, CCJ, CVX, CF, MDY, DIA, and SDS. We bought a very small position in Tesla today on the strong gap up, and ultimately ended up having to trim that into the close. So there's the trades for today, and there's the way, I guess, a nice visual representation of how we de-risked and lowered our exposure as the day wore on. Bottom line, big gap up leads to epic fail reversal. However, if there is a silver lining, it's that 4385 is holding on the S&P for the time being. So moving here to the key levels, like we've talked about, that 4385, this is the key level to watch moving forward. Everybody sees it, slash this 4400 area, like Don has noted here. That's the area you're going to want to watch. You're going to want to watch today's lows as well as these recent lows on the S&P, which correspond roughly to about that level. We do have a pretty, excuse me, let's get that pulled up here. So the 21 EMA and the 50 SMA are flat, but they're starting to turn down. We're going to go ahead and get into the charts here on the S&P. So you can see here above the 200-day for just a brief little bit this morning, call it 20 to 30 minutes, and then a nasty frozen rope down. So let's pull up a 5-minute chart so you can see what we mean. This is what a frozen slope looks like. If you wanted to flip it upside down, that's what a frozen rope would look like. So not much of a reprieve at any point during the day, really. Just selling off, more or less for the entire day after the first 30 minutes of trading here on the S&P. Like we said, the key levels you're going to want to watch is that 4385 level, which is right where the low was today. And then below that, you've got 4370, which is the low from 418. Moving along to the Qs, which looked much worse today. As you can see, basically poked their head above the 50 and the 21 for a brief moment, like the S&P was poking its head above the 200, and then a really, really ugly reversal, already breaking the lows from 418, breaking the 338.22 fib. So not much positive you can say here about the Qs. Basically below this level, you're looking at these lows here as next areas of interest, more or less, on the Qs. DIA, which is looks better than the S&P and the Qs right now. As you can see, still although it failed to stay above the 200, it is above the 8, the 21, and the 50. So the S&P and the Qs are not doing that right now. Still a really nasty candle, but for the time being, the Dow is acting better. Same situation here. If you're going to want to watch these recent consolidation lows, right? So basically where we've been for the last 2 or 2.5 weeks trying to find some support, that's where you're watching to the downside. So on the DIA, that's basically going to be this 341 level. That's the low from 412. Then your low on 418 is 342.23. IWM looks worse than MDY in the sense that it's back below the key moving averages, the 50, the 21, and the 8. As you can see, all candles pretty similar today. Again, you're going to want to watch the consolidation lows here. So 191 on, let me see if we can get that to pull up here. 195.88, excuse me. That's the low from 411 here on IWM. And then the recent low on 418, 196.53. So keep an eye on these recent consolidation lows. That's this area right here on IWM and the other indices as well. And then lastly, MDY, more just right on the 50, the 21, and the 8 with the close today. Same situation, poked its head above the 200 for a brief second, and then a nasty move down. But same situation here too. You want to watch these these recent consolidation lows. 470.93 is the low here on MDY. Keep an eye on that level. Those are going to be the key levels to watch in the coming days to the downside. So moving along here, we're going to pull up TNX just so we can put some context here. This is what I meant by rates strong again today. So as you can see, we had a decent little pullback in the 10-year note yesterday, but resuming higher today, up almost 3%. Still very close to challenging that 3% level overall. That's what that 30 is right there on TNX. Moving along to the very small amount of positive we have today, you have Jets. Although it finished at the bottom of the range, it did stay green, up almost 3%. And like I said, that's fueled by United, which was up on earnings, as you can see here, almost 10%. And then Delta also managing to stay green, up 2.5% or so. So airlines getting some boost or some bid recently following their earnings calls that they're going to be able to reach profitability maybe faster than the markets were anticipating, or increase their profitability. So some good news for the airlines, at least from that standpoint. Nucor and STLD, some anomalies today, really nasty candles here in the sense that very wide range, but Nucor managed to be up 3.5% today, and STLD also managed to be slightly green today, 1.9%. But as you can see, these are pretty ugly looking candles. And you have to keep in mind that all the other metal and mining stocks were pretty much awful today. So these two are really anomalies compared to their peers. Moving through the last couple here, we're going to show these. Tesla, not necessarily attractive here. Obviously, this is an ugly, ugly candle, but I'm highlighting it because it did stay green and there was not much of it out there. Closed right above 1,000, but this is not the type of action you want to see. This is very poor ability to hold the gap up, and the market's certainly reflective of that. And then Twitter also managing to be green today. So both of the Elon related stocks eking out a green close. As you can see here, Twitter just barely green as more news continues to come out with Elon and what they may or may not be doing with the hostile takeover and that type of thing. And then lastly here, IBM, a recent earnings gap, excuse me, making a day 2 higher high and actually closing green. So one of very few technology related names that actually closed the day green today. So that's all the positive. Now we're going to move into the negative. And I mentioned the metals and mining stocks having a tough day. Alcoa maybe having the worst day of all, down 17% today following its earnings call. Pretty awful reaction here. And again, I'll show you a 5-minute of this. Really no let up in the selling here on this one either. So Alcoa down 17. FCX also reported earnings today, down about 10% or so by the end of the day. Similarly, a nasty candle. And remember, these are commodity stocks that were benefiting while the other commodity areas where they had a tendency, at least over the last 2 to 3 months here, as you can see in this run, to show relative strength when technology was suffering, but not so much the case today. And that's what I meant in the title by broad selling, broad market weakness. It was really nowhere to hide today. Most sectors out there were having a tough day today. So FCX and AA having really bad reactions to earnings, and XME, as far as the sector goes, looking relatively similar, down 6%. GDX, the gold metal and mining, or the gold miners ETF, down about 5%. So some bad action in the metals and mining space today. Also in the fertilizer space, MOS down 10% today, as you can see, breaking the 21, and CF, which we got stopped out of today, down about 6.5%. So we saw a really nice undercut and reclaim of the 21 yesterday, just to be down almost 7% today and close below that Q100 level on CF. Some other names that had really nasty reversals, and I'm running through these because I want to show you guys that it ranged from basically every sector and space you could imagine within the market today. So PanW, which was one of those that looked really strong early this morning, ended up finishing down 5.5%, as you can see here. Almost made a run at breaking out over these recent highs, and ultimately finished way off of those highs of almost 640 down to 590 here on PanW. PWR, which is typically not so prone to days like this, but a recent earnings gap kind of fueled this big move, and it had acted relatively well. Today, not so much the case, down almost 10%. As you can see here, pretty nasty action in a name that typically is not so much prone to such nasty trading, as you can see there. On the other side of things, solar stocks, which have a tendency to be volatile, absolutely crushed here in the last 2 days. So as you can see, Enphase actually on the 19th, which is going to be Tuesday, looked relatively constructive on this pullback, had reclaimed the key moving averages, and subsequent to this, you went from 195 to 156 in 2 days of trading. So I'm not a math expert, but that's about a $40 move to the downside, or about a 22-23% decline here in 2 days in Enphase, which is one of the leading solar stocks. Sedge, the other name in this space, also getting taken to the woodshed, down about 8-9% today. Similar type of behavior, just brutal. No reprieve in the selling, down 8% yesterday, down 10% today. These just failing miserably to maintain any type of strength whatsoever. Obviously, the higher beta stuff having a really tough time today as well. Datadog, and I'm just using these as examples here, down about 8%. Net also down about 5-6%. So like I said, it doesn't matter if it's high beta, metals and mining, oil and gas like DBN, which had been a leader, down 5.5% today. Matador, another oil and gas leading name, down about 6% today. CVX, a name that we were stopped out of today, down a little over 5% or right around 5%, excuse me, breaking the 21. So really just all over the place, poor price action. Google, another name here, breaking this key 2,500 level. These lows right here are going to be key to watch, even though it is extremely close. As you can see here, the low of today almost on the cent matches the low from all the way back in January. So not very promising looking for Google there. Amazon in the same boat, not necessarily the action you want to see, breaking below 3,000. That's pretty imperative that it needed to hold that level. As you can see, it's a really, really big level for Amazon. Not what you want to see slicing through that like it with so much ease. And then lastly, we're going to go through a handful of these sectors. Already pulled up XME, XOP. This is the oil and gas exploration ETF. As you can see, not the candle you want to see. Bearish engulfing or negative reversal would be the theme of today in the market. XOP down about 5% here. In the oil space, XLC, which is dominated by Google and recently adversely impacted by Netflix, down about 3% today after being down 4.5% yesterday. And then lastly, biotechs, just another symbol of the risk on space, down 5%, roughly 4.5% today, after initially trying to get over the last 2 days highs. Nasty reversal back down like most everything else in the market within just a couple of cents from taking out these lows from back in March on the 314 low there. So not much positive out there at all. Like I said, pretty much almost every sector, most every stock had an awful day today, with very few exceptions like airlines, a couple of those steel stocks, like I mentioned, IBM. But for the most part, a pretty bleak day out there, a bloodbath, if you will. So that is going to wrap up the video today. I hope you guys enjoyed it. I know it's kind of a grim one, but those are the facts. So I will see you guys on the podcast. I hope you all have a great weekend.